Should have a good turnout for today's webinar sponsored by GraniteShares. This is going to be a very different type of webinar because, as you'll see, there's more than just me and Will here. There's some very handsome young men as well.
Mm-hmm.
We're going to be talking about not just their skincare routine, but also options-based income strategies. These are influencers, especially in the YouTube space. Each of them have phenomenal YouTube channels. We'll touch on each of their backgrounds. But hopefully it'll be a good conversation. For those that are here for the CE credits, I will email you after this webinar, get your information, and we'll try to get you that CE credit. And of course, if you have any questions during this conversation, put in the Q&A. We'll address it towards the end. But like I said, this is going to be a very different, free-flowing conversation. So with that said, my name is Michael Guyad. This webinar is sponsored by GraniteShares. I think it might make sense to have everybody introduce themselves. So let's start off with Mr. Will Rind, who's kind of an important guy here.
Thank you. And obviously, good afternoon, everybody. My name is Will Rind, founder and CEO of GraniteShares. We are an ETF issuer. So issue ETFs here in the US, in European markets, and active in Asia as well, based in New York City.
Mr. Jordan Collier. I want to say Collier because it sounds French.
Everybody does, and everybody makes those same assumptions. They think it's French. No, it's Collier. I run a channel called ETF Investing, focusing on just that, income investing strategies through ETFs up here in Canada.
Which has some French influences, by the way. Let's go. Yeah, exactly. Spencer Dunbar, who recently got married.
Spencer, from Spencer Invest, I talk about a lot of things these days, adding a little bit of growth, but my primary bread and butter content is weekly dividend ETFs that have kind of exploded in popularity. So,
Mr. Marcos.
Hello, my name is Marcos. I run Marcos Mia YouTube channel, talking about everything ETFs from income to growth and everything in between. I also host the #1 show for ETF issuers and influencers. I'm just talking about ETFs, and I think that's always going to be the goal. So I really appreciate you having me, Michael.
And of course, Todd, who's got a telescope in the background because he wants to go to the moon.
Yeah. One day. I run Unconventional Wealth Ideas, and we focus on living free out of your brokerage account. Not only just trying to outperform the markets, which we're currently beating all of the indexes. Even during the recent decline, we're still beating the indexes. We're trying to not only do that, but live free out of our brokerage accounts.
I want to go to Spencer first. You said these strategies, these weekly strategies, income strategies have exploded in popularity. First of all, the fact that you guys built a following is a tremendous accomplishment. I know how hard YouTube is. I want to get your take, Spencer, and then maybe everybody else kind of chime in. Why is it that there's been such popularity for weekly income strategies?
I think it comes down to the simple, I don't want to say greed, drive, I should say, of people wanting money as soon as possible. And it blows my mind a little bit. I've actually received quite a few comments over the last 6 months. I do deep dives into the weekly payers and track them. And there is actually a pretty vast audience of people that would prefer a fund that pays weekly over monthly, even if the monthly paying ETF outperforms the weekly. So the drive for cash flow for weekly dividends is there. It's just there. It's growing in popularity, and it seems, I'm not sure if it's an older audience, a younger audience. I kind of get a mix of it. I get kind of the best of both worlds, where young people want money now, and older people that are in retirement or that are looking to retire or just looking to have higher levels of cash flow are interested in getting it weekly over monthly. So,
Will, I remember at a conference you and I were at, you were a speaker, and you were mentioning some stats around the growth being like unbelievable. You threw some numbers out. I don't know if you want to kind of regurgitate that.
Certainly the interest is massive. I mean, the numbers will change, but it's, billions of dollars worth of interest in this category. And I think, Todd said something that, really reminds me, I think, of what's going on. And that's, the living free out of a brokerage account. And maybe that the sort of the riff on that, which I come across time and time again, is just people wanting some financial freedom more broadly and the ability to sleep at night. And I think where specifically these income strategies have become so popular is people really just have one income source in their life, and that's typically their job. Or if you're retired, then it's your primary source that you've created. And particularly for people, I think, that are working, it's this desire to have a secondary source of income independent from your job. And that could be, for job security, if you were to lose your job. It could be for just to help with, monthly expenses, etc. But I get the sense that more and more this is becoming a more popular movement, not just here in the US, but globally, that people are trying to create income streams, passive income streams, beyond the 9 to 5 that they have.
Let's touch on that globally point, because I see, Jordan, you're nodding your head, right? I mean, you're in Canada, which is interesting, right? That you've got obviously non-US content creators focusing on this category.
Yeah, for sure. And I think, Will, you're absolutely right about that. I think what people see in the income strategy is opposed to growth, which really relies on price appreciation, maybe still working your 9 to 5 to contribute more to the growth strategy. And so it really relies on that primary income source, whereas the income strategy, and especially in my experience, right, I work full time at a shipyard in Vancouver, British Columbia, and that's exactly what I see. People see me taking, a lot of time off, like 1 day, 2 days, potentially every couple of weeks. And it's not, it doesn't really impact me in any really serious way. So even people that work with me and interact with me, I can see it's an infectious, kind of movement, and people want more of that. They want more. They essentially want to just purchase more independence, purchase more time for themselves, and they get that through the income strategy.
I saw Marcos was at a conference in California, and he was bringing his camera and he was interviewing different fund issuers and companies. Marcos, I think you built a nice following. You mentioned that you're covering all kinds of topics. Do you find that the options-based income strategies tend to get the most traction and attention? I'm curious kind of what you're seeing in terms of where demand for content is.
100%. I mean, that's where the most viewership are for both the ETF issuers as well as the retail investors and influencers. And I'm going to kind of touch on like Spencer's point of like people saying that they want more income. And the reason is like why. So this is like a big belief I have is, financial instability. That's kind of my thought process of people thinking that, things might be too expensive, fears of losing a job, kind of like what Will said, is just that fear in people just wanting income now, and they're willing to trade off and cap their upside for that stream of income, which I find pretty bizarre. I'd rather just go for growth and then let that compound and sell it off at a way more tax efficient manner. But that's the reason why, something like GraniteShares and YieldBoost and all these other issuers are coming out with innovative products that allow people to get income now weekly and hopefully have a good strategy for their portfolio.
I think a lot of people that are familiar with these options-based strategies are familiar with covered calls, right? As the sort of primary way to generate the income. What you do with YieldBoost is really quite different. Let's talk about it.
I mean, there's definitely a part of it that's very different, but also a part that's quite similar. And, covered calls is probably the brand name that people are most familiar with in terms of an options income strategy. And instead of selling a call option, we sell a put option. So the payoff is identical. Where YieldBoost differs is that with a traditional covered call strategy, there's no downside protection. So you sell the call option to generate the income. And then if the underlying goes down, you have exposure to that downside movement. Where YieldBoost is different is we buy a put option at the same time. So we create a spread. We call this a put spread, a bullish put spread. And this involves both selling a put option to generate income and buying a put option to offer some downside protection. So you effectively have a defined outcome for that week's movement.
How low is that floor? I mean, it changes weekly? Talk about the mechanics of that.
Yeah, I mean, that's obviously where the management comes in, and there's an element to that where, as the manager, we can decide, where to put that. I mean, I think, first and foremost, these are designed to manufacture income, and they're designed to manufacture, high levels of income. So we do that as the primary objective. The secondary objective, as I said, to generate some downside protection. And typically, we sell options that are close to at the money for the income generation, and then we buy put options which are roughly around one standard deviation out of the money, so slightly out of the money.
Go to my boy Todd here. I want to call you the Mythbuster, right? Can I call you the Mythbuster? I think
Absolutely. I'll take that.
All right, so let's bust some myths when it comes to options-based income strategies, cover call strategies, and what you're seeing out there. I see you do these spaces. I see you come in and you no holds barred. You end up talking about things which people don't want to talk about, which is around NAV erosion. But let's talk about that.
Again, thanks for having me, guys. And I know these dividends that we get are quite large. A lot of different fund managers have these higher yields these days. And like we all spoke, about on the panel, 50% of people are paycheck to paycheck. And so they're looking for extra income. So they're going for places to get that. And then when they look at the charts of these companies, they see that the charts are declining. So the investment's declining. And all you have to do is just factor back in dividends. And then you see a different chart. It looks like a completely different chart. Try Morningstar. I don't get paid by anybody here. I'm just saying Morningstar, nothing. No, I don't get paid by GraniteShares or anyone. I just, I have my own portfolio and I get very passionate about this because we earn over $1 million per year in dividends, but people think that that's all fake, because, the funds are declining and the charts are declining. And so this is just a complete false narrative that I'm pushing. But again, we're outperforming all the indexes. And I think, again, people just need to factor back in dividends, use a Morningstar, go to the fund's website, go to GraniteShares website, go to everyone's website, and you'll see their total returns. And also on a day-to-day basis, I think they have this misconception that these are so risky, they're falling. But yeah, maybe you're talking about some Bitcoin-related areas of the market or some small caps, or some high beta growth areas. But some things that I like, for example, with GraniteShares, and again, I don't get promoted by anyone. I don't get paid for promotion. I just want to throw that out there. GraniteShares,
Todd is making $1 million in dividends. He doesn't need to get paid by you.
Thank you, Michael. I appreciate that. Thank you. And, I know that GraniteShares has, some of those, like Mag 7 names that I think are all wonderful names if you just go by their statistics. Obviously, look at their performance over the last 10 years. But then he also, I was speaking about Will, but GraniteShares, they have, indexed vehicles as well, like YSPY, TQQY. And I was just mentioning this to Will before the podcast started was, those held up really well during the recent downturn in the market because they're not tied to those high beta areas, which a lot of people think, all this stuff is just nonsense. All these high yield names are falling, but they're just chasing the highest, the higher beta names, the most exciting meme stocks out there in some cases, like the Coinbases of the world or something like that, the micro strategies. And so if you have a total approach with your account and you're staying basically tied to the indexes and you keep the other kinds of holdings smaller and weighted smaller in your account, well, then you tend to fall with the indexes. And so that's why we continue to outperform even with margin, even with the leverage, we're still outperforming. Because our dividends then come in and pay down our margin, which grows our performance. And then our account grows at the same time and our margin debt falls. It's really a great strategy, in my opinion, if you do margin conservatively. And so, again, I use YSPY and TQQY. I've been hiding out there recently. Everyone's been going to, other funds. I don't really want to mention them. But for the purposes of this podcast, I am just sharing what works with me. I have been going into those because they have the put option, like Will is describing. They sell puts, which I think it's another misnomer here. And I appreciate you letting me, take the floor on this, Michael, just a little bit, because, a lot of people think selling options is risky or something. But I know that when you sell puts, to me, it's one of the more conservative ways to do it. Warren Buffett did it with Coca-Cola. He sells puts on Coca-Cola. And so when I saw the funds that, GraniteShares was offering and they're offering indexed funds that also had puts with them. So they might be using leveraged vehicles like a UPRO or an SPXL or something to get their higher yield, but they still outperformed in a down market recently. Once again, I just want to tip my hat off to you, Will, there, because, that was quite impressive and that really helped me continue to outperform. And if people just were aware of all these facts, play this back. If you didn't hear this, play it back slowly, that would, improve a lot of your results when you invest.
Will, you just launched, I think, 2 other YieldBoost funds recently.
Yeah, we're increasing the offering all the time. So we have YieldBoost semiconductor, which is a semi SEMY, and that's based upon an underlying semiconductor, SOXL, which is a 3x semiconductor ETF. And then we also have YieldBoost Gold Miners, which again follows the same theme, underlying leveraged gold miners index. And I think, again, to Todd's point, that this is really just expanding the offering. So it's not just about individual names. It's about broad indices, whether it be NASDAQ or S&P, or more thematic indices in terms of gold mining stocks or semiconductors. But ultimately, it's putting the investor in the driving seat, which is, taking a view on what their particular flavor of income looks like, and the view, the conviction they have around that underlying index. And clearly there's a trade-off in terms of risk reward. So your individual names are going to have, all things being equal, a much higher level of income than a broad index. But there's, also an increased level of risk that goes along with that. So it's really just increasing the offering to offer a broader range of ideas and strategies that people want.
Marcos, I want to go to you. I think people think about some of these income strategies. They think an entire portfolio is just made up of these types of strategies. I don't get the sense that your portfolio is just that. So assuming I'm right on that, how do you think about how much you want to allocate towards strategies like YieldBoost?
So for my portfolio, I have, it's funny because whenever I do the interviews or like my content, everybody's like, so we just hit 50,000 subscribers yesterday. It was awesome. It was amazing. So we're going to celebrate this weekend. And we get all these views and stuff. Then people are like, Marcus, do you have any like cover call products? I'm like, well, I have a different strategy. I'm just an interviewer at this point. But yeah, so no cover call strategies. But with YieldBoost, I'm noticing a lot of retail on Blossom and just like on the comment section have pretty sizable positions in a few YieldBoost products, that being TSYY, NVYY, and then usually the more sophisticated investors like Todd, for example, would use like YSPY and TQQY, just because there's like different ways to use those strategies. But I would say with GraniteShares and what YieldBoost is doing right is kind of educating the investor, because I would say that with YieldBoost, it's kind of more of a complex product that people might not grasp right away. You look at like a JEPI or JEPQ, cover calls on the S&P or the NASDAQ. But when you're doing these type of strategies, like put spreads, right? It's more beneficial to educate the investors. So they love seeing Will's interviews.
Which is an interesting point, Jordan, right? Because you can argue there's two types of investors: those that just want the shiny object, high yield, and those that actually want to know what they're investing in. And I see a lot of the comments put around competitors to YieldBoost, which there are many, but not Max. But I'm curious. I mean, as a content creator, do you find do you find people really want to understand how these things work, or do they just see that yield and that's it?
No, they do. And a good example of this is I was in Toronto for the Blossom event that was in September, and a lot of the sponsors, it was really every booth was pretty much a cover call ETF issuer. It was those were the primary sponsors of the event, and one of the sponsors in particular was just telling me they had a booth, and one of the fund managers was telling me how these retail investors are coming to them with more sophisticated questions than advisors are coming to them. And he was quite surprised by that. And now, to me, I'm not surprised. I've been doing this for almost 3 years with this channel. So I get a lot of the same questions, as I know many of the other creators do as well. And I'm sure Michael and Will, you do as well. We all tend to those same questions. These income investors, they want to know. This isn't a transient audience. These are people that are committed. They want to watch. You make an hour video, they're going to watch an hour video, right? Not everybody, but there is a committed core that really wants to know. And they see people like myself and others who are using these products and trying to use them responsibly, and not just trying to just be willy-nilly. Like we want to educate our audience, and we also want to be, like good leads in the space as well.
You use the word responsibly. So Spencer, let's go with that. Do you find that the people that receive these distributions, do they spend it, or do they reinvest it, or do they reallocate it somewhere else? I mean, what are people actually doing with that payout?
As we move into an income-centered space, I initially started dividend investing using, covered calls to pay for my car payment. And I realized after I paid off my car, I was like, well, what do I use it for now? And I just started reinvesting it instead. And
I thought you bought a second car.
I wish. But what happened was, it was pretty amazing, because now I'm like, well, now my distributions are higher. It's not miles higher, but I mean, every week getting a little bit more piled on top of it. And so I find that there's, of course, a mix, because the retirees that are looking to just pull the money out and live off of it. But we're now seeing a younger audience utilize this. And there's so much you can do with it. Yes, you can use it to pay down your student loans. You can use it to, help pay for rent for a house. But on top of that, once you start piling it back in and seeing the growth aspect, you get compounding involved. And it really kind of changes the space where income, I call myself an income investor, but I'm kind of like a hybrid income growth investor, because I'm not just relying on my income to live. I don't spend any of my dividends. All of it now is reallocated either sometimes to growth positions, and then sometimes back into the original holdings as I'm getting paid. And I think that's something that's different that we're seeing over the last couple of years. It's kind of taking shape now, and people are realizing, yes, you can be a hybrid investor. You don't have to go one or the other, dividends or growth, but you can do whatever you want with the dividends, and your cash flow is up. So I think that's a really important part. And I think income investing can get a bad rap from growth investors, but I like kind of showcasing that you can do whatever you want with it. You don't have to pull the money out. You can keep growing your portfolios, utilizing those distributions.
I agree with everything Spencer was saying, including what Jordan and Marcos were saying. But I would just add that, I think a lot of people just drip anything. And again, that's not what Spencer was saying, right? He has an actual strategy with what he drips. But some people will just kind of drip anything on auto drip, and they should perhaps drip on dips in the market. And, and they're not only just auto dripping, and they should be buying on wider nets down and wider nets down. But they might be dripping some of those higher beta names that I just mentioned again. Instead of dripping into the more conservative index related funds, they're dripping everything, and they're wondering what's happening to their performance. They're not manually dripping, I guess you could say, dripping on dips, and then watching their allocations, to your earlier point, Michael. They're over allocated in the high beta and under allocated in the boring index ETFs.
And the whole category will really grew because people wanted income from growth, right? I mean, especially with bonds not really being attractive.
Yeah, I mean, there's a number of, clearly this is where there's a broad church of investors, and everybody's need is different. I think where I find a lot of this came from is in the mutual fund world, where you used to have growth and income funds, and you used to have a fund that kind of styled itself as giving you both. And actually what you ended up with is not much growth and not much income. And I think one thing that the ETF industry has done really well is develop these hyper precision tools that will deliver you growth or hyper growth or income, or, significant amounts of income. And you can assemble these to, meet whatever needs that you have. And that might be, if it's a need for income to cover specific things, if it's a need for growth, if it's a need for, whatever it may be, you can assemble that, very precisely now in a way that you just couldn't do a few years ago. And that's what, the benefit of ETFs like this allows you to do.
So like everything else, there's always competitors, right? So I'm curious to hear from everybody, if you see, one options-based income strategy around NVIDIA from one issuer versus another issuer, what would make you choose a particular fund? Is it brand name? Is it the strategy? Is it the yield itself? Is it the fee? I'm curious, when you have different types of products, what makes you choose other? Go ahead.
Yeah, I don't mean to just keep touting YieldBoost, but I mean, when you're...
Please do.
When you're... Yeah, I mean...
I'll say it. Yeah.
I'm not trying to come off like that, but it's just that when you're investing in a turbulent market, or when you are using some leverage, it's nice to have put options, and it's nice to also sell puts, because selling puts is typically for me, I've experienced lower volatility, than just, buying, let's say, well, selling puts is lower volatility in the stock itself, and then when you're selling puts, you have all kinds of advantages that it brings. We could get into that later in this discussion, but the way that you sell puts with the buying of the put, it reduces your volatility, and, a lot of these competitors, to your point, they will sell some puts, but a lot of them don't add in a put, and that's what I really like about YieldBoost. And that's what, again, has been holding up my portfolio so well.
Marcos, should jump ball to you on that one.
Oh man, I feel like a lot of investors are going to be really tied down to a few issuers. I think my prediction is that for next year, at least, there's going to be a lot of investors piling into like 2 or 3 issuers. And I just firmly believe that it's going to be like an arms race to see, we're seeing outflows from a particular issuer, and people are trying to figure out where to allocate that money. So they're going to allocate towards 2 to 3, maybe 4 issuers max. And that's kind of going to be their home. But I would say for certain strategies, though, there's issuers that come out with, highest income possible, leverage plus income. They don't even do cover calls, but they give you income, and then selling puts. So there's going to be like a whole different menu of strategies. But I firmly believe that we're going to see a lot of retail investors pile into 2 or 3. And it's going to be fun to see which of those 3s are. I think you could see inflows on like etfaction.com, but I'm really excited for what everybody has to launch. And I know a lot of other issuers are launching really cool products in December, and I want to see what happens in 2026. So it's going to be a lot of fun.
Marcos, I remember like a couple of years ago, I remember speaking with Adriano. We did an interview, and we were talking about how we thought that we're at the pinnacle of launches, and boy, we were so wrong about that, and it just keeps growing year after year after year. So at this point, I'm going to hold judgment on any of that. Next year will be bigger than this year, and I just think it'll keep getting better and better. But as far as like strategies are concerned, with maybe the same ticker symbol on it, I mean, investors maybe think also about, just how you're getting your total return, right? Is it how much of that total return is wrapped up in the income coming to you versus what you're getting in the share price? So this will more or less correlate with the call option writing coverage, right? So up here in Canada, a common strategy up here, and this is where other investors might, they hear the words cap upside. Well, a lot of the funds up here in Canada already have a built-in hybrid strategy where you get exposure to, say, 50% on the portfolio, call option writing, and then the other 50% is unbound. It can do as the underlying will perform. So that's also a nice benefit as well, is that you essentially get these 2-in-1s. You don't have to, say, go to one fund just for an income and then buy back the same ticker without any sort of option writing on it. You get these sort of more hybrid strategies. So investors can always go for those kinds of strategies. And just remember, on that 50%, that's what's going to get capped on the upside. And then the other half will allow for much more growth in that cover call ETF.
Just a reminder, folks, I will be emailing those that are here for the CE credit after this webinar. Will, maybe I think it'd be good for you to kind of do a summary on YieldBoost on GraniteShares, especially given that we may or may not be in an interest rate cutting cycle, and what that might mean for strategies like what you offer.
The premise of high yield clearly is correlated with rates, in the sense that the lower that interest rates go, then the more people have demand for yield or income in the portfolio. So, crucially, when rates went to zero in COVID, and after COVID, you had a huge amount of interest in income or yielding ETF yielding instruments that yielded something. And the higher that they got, the more interesting that became. And so now, we're in an environment where it may not be right now, but at least the new Fed chair, coming in, and one would think that the administration is clearly interested on rates being a lot lower than they are today. And therefore, it will just further fuel this demand for income. I mean, people's bills aren't going down. So whether it be car payments, insurance payment, whatever it may be. So people's income needs are not going anywhere. And therefore, the ability to manufacture income will continue to be as relevant as it's ever been.
I think the other thing that's gone down in price the last 3 years are turkeys. I saw some stat on that for whatever it's worth. That's like real. Everybody else here, I'd like you all to kind of talk about your channels and how people can follow you. So Jordan, you first.
Yeah, I mean, very simply put, you can follow me on Blossom at Cover Call ETF Investing, or on YouTube, covercalletfinvesting.com. You'll see just a bit of a hybrid approach between just interviews. I talk a lot about, my own personal journey and, making my way towards FIRE, having been doing this for almost 2.5 years. So that's where you can find me.
Marcos.
Yeah, Marcos Mia on YouTube, and posting a lot of content. So hopefully see you there.
Spencer
invests everywhere. I think I'm on nearly every social media app. I'm on X. YouTube's the main platform. TikTok, shaky on there, Instagram. Yeah. I'm going to talk all about weeklies, and I'm going to continue tracking. I usually buy $100 of every weekly pair. So I have a lot of the YieldBoost in that portfolio. Now there's I don't even know, 200 weekly pairs. So it's getting a lot more financially needing, but yeah, follow me on there.
And of course, Todd, who I'm telling you, you got to do. I want to see what you're looking at from the telescope. I want to know what you're looking at from that at night.
Yeah, there's some pretty good views out there. Yeah, you always talk to me about my telescope. It's great seeing you, Michael. And it's great seeing everyone here. Follow me, at YouTube, Unconventional Wealth Ideas. You can also go to my website, unconventionalwealthideas.com. And also, you can check out our Discord. We have over 3,000 members there, and we talk anything finance related. Anything that's helping us live free from 9 to 5.
For GraniteShares' full lineup of products, GraniteShares.com. You'll see YieldBoost as well as their levered ETFs and several other institutional funds. So thank you, everybody for attending. Thank everybody. Hopefully this was an interesting conversation. I'll release this as a podcast soon enough, and we'll see you all on the next webinar sponsored by GraniteShares. Thanks, everybody.
Thank you.
Take care, guys. Great to see you.
Good seeing you all.